This is the Analysis in Chains with Nathan Williams and Neal Kieran.
Hello, everyone. Happy Monday. Welcome to Analysis in Chains. Nathan here. Neal, release the Kraken. It's back online.
I know. Kraken, whatever you want to call it. It's back online.
We just had an argument before the show started about how to pronounce it. I was always sure it was Kraken, but apparently it's Kraken. I don't know.
What. I think people can tell us in Slack if it's Kraken or Kraken. I always thought it was released to Kraken. That always had more impact. Anyway, yeah.
You say Kraken, I say Kraken.
I'm sure there's a song in there somewhere, but
you say Coinbase, I say Coinbase.
Okay, that's actually funny. I'll give you that one.
Oh man! So a few people had been biting their nails over the weekend.
Yeah.
I know my father had some money tied up in Kraken. And and not sure if he was going to be able to withdraw it to. He was trying to get in on an ICO that he was whitelisted for, and he was like, I can't seem to touch my Ether.
Oh wow!
So
wow. Yeah, I would have been very nervous. Like the thing that everyone should be mindful of whenever you use exchanges and exchange cryptocurrency, best that you put it into a wallet as soon as possible. That's the best way to take care of your crypto. I know there are some traders out there who are, often using exchanges because they're always, exchanging crypto on a regular basis. But if you're not one of those people, best you put it straight into a wallet, because you're going to be at the mercy of these exchanges. Because we already know that from time to time they do get hacked into, and people take away bitcoins and other cryptocurrency. So we'll always be vulnerable to that. And then you have this other vulnerability, which is, hey, there's an update. It should take an hour. Oh, wait, it took 2 days. And the thing is, some people have millions of dollars of cryptocurrency. I would not sleep well during that update. So yeah, this is I think a warning for everyone, but also something we have to be mindful of is that, exchanges, maybe we need to look into ways to, make sure people are better protected when they use them.
One thing that is important to keep in mind with exchanges is that they operate in a similar way to banks. If you put your money in a bank, it's not your money anymore, it's the bank's money, and then they have sort of a debt to you. And in the same way, if you put your money in an exchange, your crypto money, then they control it. They have the private keys. And so if something goes wrong, then the exchange isn't regulated in the same way as a bank, at least not yet. And so there is a danger there. It is still a bit of the Wild West. Now, for those some people may not have even heard, like if you haven't been following, basically one of the big exchanges, Kraken, whatever, they went dark. They had an update, a software update for the way that they were going to trade. The update didn't work exactly as planned, and so they just stopped allowing trades while they fixed it, but they didn't communicate of what was going on. And so people were wondering, is everything shut down? Is all my money gone? Am I ever going to get it back? It was only just yesterday that they came back online.
Yeah.
Scary times.
It is scary times. And the thing is about crypto is that, we all live in this world of vulnerability all the time. And it's ideally, these risks would be mitigated somehow. And in the past, we often talk about regulation. I know everyone wants it to be the wild, wild west. There's a lot of libertarians out there attracted to crypto because of the lack of regulation. But we said it before, if crypto is to grow, it needs some regulation to protect its consumers. And the thing is that there's two areas that need to be protected, in my view. First is the exchange, something we didn't touch on in the past, but I think this whole Kraken downtime really emphasized how there has to be some form of protection for consumers there, but also there's the consumers in the ICO world, because with an ICO, if you want to do one, you just have to write a white paper and say, oh, this is our team, and away you go. I sometimes I'm checking out ICOs that just went on CoinMarketCap, and I want to learn more about them because I can see that they jumped up 100% in 2 days. And I look on their website and I don't see any faces. Like, I have no way of knowing that these people really exist. And the thing is, if you're an ICO investor, like, you really are extremely vulnerable to a lot of these companies. And the ICO world is a healthy part of the crypto world. And if consumers not invested, it could just completely fall apart. So I think that this Kraken issue really highlighted the need for regulation, but more just to protect the world rather than put people in jail.
You remember last year with there was an ICO called Confido, and they had faces, they had LinkedIn accounts, they had a white paper, they had everything. Whole thing was a scam.
Wow.
The people, the LinkedIn accounts were made up, everything, and the people just disappeared with all the ether that they collected.
Wow. So and that's very interesting.
Yeah, I mean, how hard is it to make a new LinkedIn account?
Yeah,
right?
exactly. So, and I would be fooled in that case. And the thing is that
there were a lot of veterans who were fooled.
Yeah,
and I mean, what can you do?
I know.
In that case, so but this really highlights the importance. Now, I get the desire for sort of a Wild West approach because there are burdensome regulations, and sometimes that are designed to keep the little person down and to enrich the people who are already rich, and no one wants that except the rich guys.
Exactly. Yeah.
So, but it doesn't. The other end of the spectrum isn't just to say, well, every man for himself, because then the rich guys will just make their own rules anyway.
Exactly. Exactly, and I think this really extends into something else I saw during the week that really caught my eye, and that is Steve Mnuchin, who is the U.S. Treasury Secretary, and he said something that kind of goes along with what you just said. He says, we want to make sure that bad people cannot use these currencies to do bad things. And he wants to make sure that cryptocurrency and Bitcoin does not become another form of Swiss bank account, which I thought was quite rich coming from him, considering the fact that considering the fact that he worked for hedge funds and Goldman Sachs and the likes, and he probably lives off hedge funds in the in Switzerland. So it's clearly
the most trustworthy individual when speaking about keeping bad people from doing that.
Exactly. But this really goes back to your point, is that, like, my fear is that people get the wrong end of the stick when it comes to the need for regulation, and that is, it ends up suppressing the opportunity that crypto has offered to many of us, and then it becomes like just the rich people making the rules. So I think this is something that people have to be mindful of. But then people like Steve Mnuchin kind of lose the whole point of cryptocurrency, is that people are fed up with the rich managing the majority of wealth in the world, and people wanting to have their own bank account to feel more protected. And so he kind of is missing the point. And I feel that in countries like US, if they were to introduce more rules, well, actually, I think more people would be inclined to invest in Bitcoin or in other cryptocurrencies, because their country is trying to clamp down and stop them from having their own means to own their own wealth. So I think he's missing the point. And whereas when you look at countries like Canada and in particular Japan, they're going the opposite direction. They're really encouraging people to use cryptocurrencies more. So in Japan, you have Bitcoin recognized as an actual currency. And then in Canada, they're now, and in Quebec, where I'm from, they're actually pushing for miners to come to Quebec. You have Bitmain now setting up shop in Quebec because the local government wants to attract miners. They have very low costs for electricity. So you see,
And it's all
It's all
hydroelectricity too.
hydroelectricity. So you can see this movement in Canada. Canada's like, okay, we're going to be the innovative country, and US has become this conservative country trying to be protective of its wealth instead of actually seen as an opportunity for its citizens. So I think this is going to be
I
a
got
very
it.
interesting movement, I think.
Yeah, Neal, I got to say something. You're really kind to someone, the hedge fund manager, missing the point. I would say that's really the benefit of the doubt. I would say that if you've got a hedge fund manager, they got the point entirely and are trying to subvert it.
Yeah.
That would be my default assumption.
I think you have an excellent point. When I say he's missing a point, probably publicly he is missing the point, but yeah, I think you have a very good point. Privately, he probably knows what's happening.
I mean, the thing is, this is someone whose life was dedicated to, gaming a system in order to make money, and it's the way Wall Street runs. It's the way these big managers go. And one of the exciting parts of crypto, and one of the reasons that the hardcore old OG crypto guys got into it in the first place, is because it does represent sort of a redistribution of power and value. That now I don't need to trust an established bank to exchange between people. I can fundraise without having to give up equity in my company, and I can fundraise from the average person on the street, whereas in North America, you need to be an accredited investor. Under the guise of trying to protect grandma and grandpa from investing in a scam, you block out every small person from doing any sort of investment. So there is a power shift with this, and I think it is important to be careful to regulate it in a way that guards the little person and the casual investor from being taken advantage of, but not in a way that shuts them out. And I think if I was to draw a line of best fit and make an estimation of where someone like Steve Mnuchin would want to draw the line, it probably would be on the line of protecting the big hedge funds, maybe because of his background. I think it would be a safe assumption.
Yeah, I think it's a good point. And what we've seen this issue arise with Jamie Dimon as well, who's actually backtracked on on blockchain and cryptocurrencies recently. But I think there is a sense that because it's not regulated, they can't get a piece of the action right now. And if it continues to grow while they're on the sidelines, I'm sure they don't. I'm sure that they don't like that. And some of the smart tech guys, if you think of a lot of those companies invested in Facebook in the past, I can't remember the name of the name has left me, but some of these VC, I'm trying to remember.
VC that invested in Facebook, Peter Thiel?
Yes. No, it's not Peter Thiel, but it's another company. Anyway, I'll remember later on. They invest in Uber, Facebook, Google. You think of it, they've invested.
Sequoia?
No, it's not Sequoia. Anyway, it's Andreessen. That's it. Okay, I'm sure.
Oh, it was
okay. I'm sure we just wasted a minute of people's lives trying to remember a name of VC. So Andreessen and Horowitz have actually started buying crypto because they've actually recognized this shift. They used to be the VC guys helping these Silicon Valley firms take off. Now they're realizing, okay, this is the new wave. You have to buy the cryptocurrency of these projects you want to see do well in order to help them take off. And so this is the new shift. And a lot of these hedge fund guys can't participate because of various regulation. So it's interesting seeing them like getting upset on the sidelines. And I wouldn't be surprised if you have lots of traders, they would take their bonus, their cash bonus, and put it straight into crypto. I'm sure a lot of them are doing that, but the official institutions cannot. And therefore, the thing about this crypto is that if this is where the best returns are, that means the stock market does not get the opportunity to have those returns. So that means the bonuses of all of these hedge fund managers and the Jamie Dimons are being impacted. So yeah, like I really do feel like crypto represents almost like a revolution in a sense, in terms of giving power back to the people. And so it's very interesting to have people like Steve Mnuchin come up with ways of saying, oh, we have to like make sure bad people don't do bad things using crypto. But I feel like that's a way of trying to like, shut down this opportunity for the common person.
Yeah, well, I mean, who's top of your list if you think of bad people doing bad things? And Wall Street traders is not zero. Let's put it that way. This begs the question. We talk about regulation a lot. Should it be regulated? Should it not be regulated? But really, what should be regulated is the question. What would constitute a proper regulation of a crypto startup or a crypto ICO or investing in crypto? I think that this is an important thing to wrestle with because there are a lot of countries that are racing to create this regulatory framework so that ICO startups can be safe and can be confident, like, okay, well, we're going to do this and we know we followed the law. We're not going to get arrested later. And so that investors can be protected and know, okay, well, we can invest in this. And so what in your mind, Neal, do you think would be the optimal or at least the minimum regulations that you would like to see?
I think for an ICO, proven you are who you are. So the thing is, I understand people want to be anonymous and protect your data and stuff like this in the new world of the internet. But if you're going to create a company, you need to have a face, as the CEO, for example. And if you just prove yourself as the CEO, yes, I am this person. And there's a regulatory body that you can prove yourself to. And that's all you need to do. Just start with that. Just if you have a regulatory body that can say this person exists and says who they are, and this is their real name, we've seen official documentation. I think that's a great start, because a lot of these companies, don't offer that type of insight, and that's just pure basic insight. I think that's a very good start on the ICO side.
And honestly, that might be enough to start with. Just, okay, these guys are there and they're standing behind their wallet. They're standing behind their project, and if something goes wrong, these are the people.
Exactly.
One thing, to be honest, one thing that I wouldn't mind seeing as an experiment would be some sort of peer review system. So in the similar way that, doctors have to be certified by other doctors, or lawyers have to join the association, the bar association, having a number of established, respected crypto people forming an alliance and going, okay, well, we give our stamp of approval to this ICO. At least it makes sense, and we've checked out who these people are. A self-regulatory body, I think, wouldn't be a bad way to go. And if you think about it, that's sort of what is going on now. Not officially, but when you're looking at what ICOs to go for, the majority that are successful are the ones that have someone in an advisory position who has been involved with other ICO projects, other successful projects, as a way of giving people confidence. So formalizing something like that might not be the worst way to go.
Yeah, I agree with that idea, the whole peer review side of things, because it sets a standard for white papers, because some of them are out there are terrible and are very misleading, and they're filled with so much rubbish that you just assume, well, I'm stupid, these guys are smart, and therefore must be a good project. So I think I like the idea that you have this stamp of approval. The only thing I would be concerned about is that it could get political, and then you have people accusing other people of saying, "Oh, and it wasn't peer reviewed because we're viewed as a threat, and they don't want us coming in and doing it this way." It's kind of like if you look at IOTA. Would a peer-reviewed team give IOTA the stamp of approval? And I think, so the thing is, they probably would not, because they're used to the whole blockchain, standard that was set by Bitcoin. And the thing is, who would they be to say IOTA does not get a stamp of approval? Who could actually give IOTA a stamp of approval. And I think this is the big problem at the moment with IOTA, is that no one can really say this will work, because people say, oh, it will work, it will change the world, and other people say, this is a lot of rubbish, this is all made up, this is all like fantasy stuff. And so that's where the risk is. It could hold back innovation. If you come up with something completely new, the peer review system could hold you back. So unless you were to have, we'll call it an Ethereum peer review table, a group, for example, because I think I read somewhere 92% of all crypto out there is Ethereum based, because you have so many ICOs based on Ethereum. So if you did it that way, okay, you know what, Ethereum, do you have a peer review board that can actually do a rubber stamp on this ICO? I think that would work, because they understand their own technology and would understand if this ICO could work or not.
That's a very good point. There may be sort of a subset of crypto that this would work for, like an Ethereum peer review system or something that that works with the ERC20 or something. But yeah, there's also the aspect of how political crypto already is. Like, would Bitcoin Cash or Bitcoin Gold pass a peer review system when Bitcoin is such a big player? Just because of how strongly people feel about it. Exactly. And that's a good question. And the answer is maybe not. Okay, so I take it all back.
But I think you are onto something. Because it's a decentralized world. I think a decentralized solution is what is required. And if we have that peer-reviewed system in Ethereum or in Neo or in Waves, who only take care of their own tokens, I think people will be happy with that. But then when it comes to the Bitcoin world, as you said, like Bitcoin Cash, Bitcoin Digital Gold, it's impossible, for any sort of peer-reviewed system to be able to stamp anything, I think.
Well, I mean, what I'm about to say might be considered anathema to the crypto world, but what if you had a trusted body? I mean, maybe you can't decentralize it because of how political it is, but maybe if you had sort of an impartial third party that isn't officially invested in any crypto, that goes around saying, well, our business model is to read and review ICOs, and maybe you have them regulate it. But I mean, the thing is, that sort of goes against everything that you sort of want. Is you don't want to trust a third party in the first place. But I don't know. I think that whatever direction we choose, what you said at the beginning is the first step. Is just people standing behind their white paper, putting their faces forward, and saying, we are behind it. This is our wallet. We've got people certifying that we exist. We are working with the different people, the different organizations to do it. And what we say we are going to do, we're going to do. And so that there is some accountability. And that might be enough to get started.
Exactly. Because the thing is about all entrepreneurs is that every investor would like to know the history of who they are, what they've done, what they've achieved. And, people are willing to invest in people who have failed, because people will think, okay, maybe they will learn this time. Maybe this is the time when everything will go well, and experience is very, very important. So, having real people and knowing who they are is so important, and something that people should not be afraid of. Maybe people are worried, okay, if they know who I really am, they wouldn't invest in me. Best I create this fantasy figure that seems cool, and maybe that will project confidence in this project. Well, I think they will have the wrong impression. I think real people is what people want to invest in, and I think there'd be a real opportunity if there were to be some sort of regulation like that out there.
I can tell you what regulation I don't want to see.
Sure.
I don't want to see any barriers to individual people making their own investments, especially for small amounts. Okay, for whales, insider trading, that's a different thing. Institutions, sure, they might need some certain regulation, but for individuals investing under 3 Bitcoin or under 5 Bitcoin or something like that, I would not want to see no regulation barring them from participating, because that's sort of the whole point of this. And it's what's missing in standard startup investments. You've got exciting new industries, and at least in Canada and in the States, the average person who makes under $500,000 and isn't an accredited investor isn't allowed to invest in them.
Yeah,
and I think that's a problem. To be honest, I mean, yeah, it's put out there under the guise of we want to protect grandma from being scammed by a Ponzi scheme. But in effect, what it does is it protects big institutional investors and their business model.
Yeah, and I think this is why transaction fees are such a hot topic, because in order to have anyone participate under 3 Bitcoins of value, for example, which is, I think today would be worth $45,000, in order to have people transact even just $1,000 in crypto, if your transaction fees are high, well, then it becomes a barrier. It's like, why would I want to invest $1,000 when I lose 25% of that to fees? Okay, I'm exaggerating in transaction fees, but this is why transaction fees are so important, because if they continue to rise, and that when they do rise, it's usually down to issues with scalability. If they continue to rise, but then you're just creating barriers. And that's why, the Bitcoin conversation is such a hot topic in terms of their means to reduce transaction fees. And that's why you have Bitcoin Cash, bigger blocks, lower transaction fees, and then you have Bitcoin trying to come up with Lightning Network and do off-chain transactions in order to reduce transaction fees. And I think that whoever can master the low transaction fees, that could end up being the ultimate winner in the world of crypto, and could end up being the reference point, because it's like, okay, I don't have to worry about this anymore. I can just move money freely around without losing 5%, without losing 10%. So I think, and so this is why I'm so fascinated with the whole Bitcoin Cash story, and I watch it a lot, is because they really are pushing hard for low transaction fees, like many other crypto. And I have a strong feeling that they could maybe usurp Bitcoin to become the main reference point in exchanges whenever you want to convert from one crypto to another.
What strikes me about crypto in general, and what I really love about it, is just how experimental it is. We're seeing people just change the rules of how money is done in an experimental way, throw up a new coin, change the rules for how it works, just see how does a new monetary system work. And so I think with a lot of what we're discussing here, the effect of regulation, the effect of the different coins on exchanges, it's all experimental, and we're all just guessing. And I love that we are able to think out loud in something like this, and the beauty of it is that we can just try
exactly.
and see how it goes.
Exactly. I completely agree with that sentiment, Nathan, because I don't know how many years we've seen documentaries giving out about cronyism, and how you've all of these big banks around the world controlling the financial system. And this is what makes cryptocurrency so amazing. As you said, and you said it perfectly, is that it's like a huge sandbox trying to figure out what ideas can actually work. And people get very tribal with certain cryptocurrencies, but people need to look at the bigger picture and enjoy it for what it really is. And that's really is creating opportunity of how money can work in the future.
Before crypto existed, the only way to change a monetary system and to see if that new system would work was with bloody revolution. Let's experiment with communism. Okay, well, let's have a war. now we can just sort of try it and say, okay, this will work. Oh, this won't. And it's going to be exciting to see who are going to be the winners and who are going to be the losers. And, that's why we're in this. Anyway, we should probably wrap up, but if anyone has comments and wants to talk about this and thinks that we're right or we're wrong, by all means, join us on Slack. Go to www.analysisinchainspodcast.com and sign up for the Slack group. We've got people on there discussing all of these things. And we want to hear what you have to think. What regulation would you like to see or not see, if any? We love having people join us. And as always, if you sign up with a Waves wallet, we will send you some Neal and Nathan nutshells for participating. Have a couple of announcements. Just wanted to fill you in. We had a live event last Thursday, and it was amazing. We had 50 people show up. It was in Berlin at the Impact Hub. We are going to try and do this once a month. I haven't set the one for February yet, but given how good the event was in January, I think we're going to have to do it again. We had Joshua Shigala, the CEO of Valtoro, join us. And we talked all about the history of Bitcoin, of blockchain, about experimenting with different currencies. And absolutely fascinating to hear from someone who's been in it since the early days. The good news, if you missed it, is that we recorded the whole thing. And so this coming Wednesday, we will post it. And so you can join in and listen to it if you missed it the first time. We are starting a Patreon. We've got a Patreon page. We'll put a link to it in the notes and on the webpage. However, if you want to be part of supporting this podcast and helping us to bring you the content, to get the episodes edited online, all the tools we use, visit us on analysisinchains.com. There'll be a link, and we would love to have amazing patrons getting amazing rewards. Finally, we are going to be participating in a conference called the Crypto Assets Conference in February. And here's a little promotion that we recorded. Hey, everyone. I'm here with Eric Holst, the organizer of the Crypto Assets Conference, coming up in Frankfurt, February 26th and 27th. Eric, why should we go to this conference?
We have a great lineup, 30 plus speakers and 25 plus startups joining us. Among the speakers, we have Gordon Einstein, the one crypto lawyer expert from the US. We have as well Fabian Vogelsteller, the guy who built the ERC20.
And more important, I will be there. How do we sign up?
Yeah, you simply go to www.crypto-assets-conference.de. And there we have, of course, for your community promotional code. It will be Analysis in Chains 18.
Excellent. I'm very much looking forward to it. Good luck, and I'll see you there. Boom, totally natural, ain't you?
Yes, I was thinking that all throughout that. Yeah, okay. Very natural.
The most natural conversation. But it does look pretty cool. I mean, Eric, I met him here in Berlin, and he's one of our listeners. He's on our Slack group, and he invited me to give a speech down there. So crypto-assets-conference.de, and Analysis in Chains 18 is the promotional code for us. So we get a discount. So that's all for now. Thanks everybody for joining us. And until next time, make crypto, not war. Thank you.